Let's go and kick off with the first chart. It's the biggest of the big in the United States market, the S&P 500. I was talking about how choppy it is but not going anywhere. This chart really demonstrates that point.
Yeah, the S&P 500 is a really interesting one. There's some really, there's some interesting features on this chart to have a look at. So firstly, you can see, like if we look back to that January high, you can see that classic zigzag decline. And this is typical of so many corrective periods, whether it be on like a short-term chart or a weekly or a monthly chart. Often see these zigzags during corrections. And I like this one so nicely proportioned, with the first and the second legs being pretty similar in size. And that's where we've got that bounce from, where the bounce has begun from the base of that second decline. And that low also coincides with the 38.2% Fibonacci retracement of the whole rally that we had from the March 2020 low. So I didn't put it on this chart, didn't want to clutter it up, but just that low point, that's smack on the 38.2% retracement. And we were saying a couple of weeks ago that was going to be a very natural place for a bounce. And just looking at the bounce that we've had, it was a really quick snapback. Market, the S&P snapped back really quickly into a resistance band, and you can see the resistance on the chart, that blue band. Now that resistance band is between 4,100 and 4,200. Now that was previously a support zone, and as we know, when a support breaks, it becomes resistance. And I haven't marked it on this chart, but 4,200 is also the 50% retracement of that sell-off that we had from the March high. So it's a pretty significant area. Now, my feeling is that I think we may see another leg higher in the S&P 500. We've been in this tight congestion band for probably the last week now, just back and forth each day. But I do think we're looking at potentially another leg higher. So maybe there's a bit more sideways action first. Maybe there's even another dip lower, not to a new low by any means, but just like a short-term dip. But I think we're probably going to get above that 4,200 over the next couple of weeks. Also very interesting to look at the volatility index, the VIX, which we've got a chart for as well, because the VIX tells its own interesting story in that it's starting to break lower after being at elevated levels over the last couple of months. So you can just see on that chart, see that lower green trend line, the markets or the VIX price is just broken beneath. So that's a sign that volatility really is coming out of the market. And that becomes a tailwind for stocks if that continues to happen. So if we can see the VIX continue to trend lower, maybe towards 22, towards 20, that could also be a catalyst for the S&P breaking above this 4,200 resistance. And look, and then it's all about, like, is that a new bull market or just a bear market rally? And I think, look, while that picture's improving in the near term, my feel on this is that the bear market rally is a bear market rally, and I think there's a strong chance we're going to see new lows later in the year. Price wise, the market's possibly done enough. It's the S&P's down 20%, Nasdaq down 31%, but time wise, it's only been 5 months since those all-time highs. And when you look at what bear markets tend to do, the average is around 9 months. So from that standpoint, I'd be taking a cautious stance on this market. Bear market rallies are tricky. They zigzag up and then they can fall back upon themselves. So look, I'm not getting excited about the rally, even though I think there's a chance that good chance we continue to grind higher over the next couple of months. I think maybe come August, September, maybe then. It's just guesswork, of course. We need to see how the price action develops, but maybe then we start seeing another leg lower. But look, got to wait and see. But I think, very cautious times in those US markets at the moment.